Hey, everybody, welcome back. Today we speak with Gary Massey, who's the founder of Massey Company, which is an accounting and tax firm located in Atlanta. Gary worked for Ernst Young and a couple of the other really giant premier tax and accounting firms for a long time, over 2 decades. And then he went out and started his own business. And this is a really interesting conversation where he sort of walks us through all the different things that a business owner needs to keep in mind from a taxation perspective: sales tax, tax benefits, tax planning, what happens if you get audited by the IRS, all of these different really sort of these things in the back of our mind as business owners that we never really want to think about, but we kind of know that we should. Gary and his team are experts. So give it a listen. Gary, welcome to the Lion's Den.
Thank you very much. Happy to be here.
Awesome. Well, I'm happy that you are here. I've got a lot of questions for you because, a lot of our clients, we work with small businesses. I know you do too. And a lot of times they have questions for us around their taxes. And so I want to redirect some of those questions to you because I know you're an expert. But first, I want to dig into your background a little bit.
Sure.
Because when I was on LinkedIn earlier, I saw that you worked at Ernst Young for about 22 years. So that's a long time being at one of the premier tax and accounting firms in the world, really. So I was hoping you could kind of give me a little bit of background into what you did at Ernst Young, maybe what a couple of your projects were there.
Well, actually, just to be honest, it was spread over several of the large firms. It wasn't all Ernst Young throughout that whole time. I was at KPMG and Coopers and other large famous firms. But my clients at that time were all large companies. And it was great. That's where I learned how to be a CPA in a very practical sense outside of school. And I worked with a lot of fantastic clients, and that's where I learned the basic skills of accounting, tax and accounting. And now I've started my own practice. I'm using those skills, but dealing with much smaller clients.
Got it. So at Ernst Young, some of those big clients, are you able to give me kind of like a vague understanding of an example of one of those projects, one of those clients?
What did we do? Well, we would do tax returns for large multinational companies. That would be most of the things that would be the main thing that I would have been involved with. Also tax research projects, typically dealing with some kind of transaction, buying or selling a company, for example. Those are the kind of things which I would have been doing at that time.
Okay. So a multinational, can we use Walmart as a hypothetical example then?
Sure.
Okay.
Sure.
Was that one of your clients?
No, that was not one of my clients. But large companies, typically they would have been large manufacturing companies or transportation companies. It was all different types of companies, financial services companies, usually spread around throughout the world, certainly throughout the United States, and sophisticated companies.
Okay. So, and if they are multinational like that, I'm sure that complicates the tax returns a lot. So like, what does that change about the tax returns? Are you filing taxes in like multiple different nations, or how does that work?
No, that's not anything that I have ever done throughout the work that I've done throughout the years. I've never filed returns in other countries. That's always done by a local expert. But there is reporting on a United States return to the IRS of the activities of a foreign subsidiary. So that you have to report. You have to include what the income statement and what the balance sheet is of those foreign subsidiaries. And that's true whether you're a big company or whether you're a small company. That has to be reported. And sometimes people forget that, but that's very important. There are big penalties if you forget to include that on your tax return. You have to be sure that you always include any kind of foreign transaction, whether it's a foreign subsidiary or a foreign parent corporation. All that has to be reported.
Yeah, the U.S. is like one of only 3 countries that requires you to report all worldwide income on your tax returns, right?
I think that's about true. But certainly it's true here. So
yeah,
have to report
and I think the other 2 are like totalitarian regimes in like Eastern Africa or something like that.
I'm not sure.
um, okay, so you're at Ernst Young for a long time. Well, bouncing around different consulting firms like Ernst Young. By the way, I started my career at Capgemini. I was on their consulting team, and so I'm kind of familiar with that model where if you're in it for a long time, you work your way up, and every couple of years you get a nice little pay bump. And so it's a kind of an industry where you get golden handcuffed a little bit. So I'm curious, why, after 22 years of kind of working your way up, why did you decide to go out on your own and start your own business?
Because I got a taste for entrepreneurship. One of the jobs that I had along the way was helping out a startup, sort of doing financial work, being a CFO for a startup. And I got a taste for entrepreneurship. I was working with people who were themselves entrepreneurs and founders. And the most beautiful thing that I learned from them is about selling, which is entrepreneurship, basically. And I learned some of the basics about how to talk with people, how to ask people questions, how to represent the company, and the basics of how to sell. And I realized, wow, I can do this too. And that's not anything that I ever learned when I was at Ernst Young. Ernst Young was great, and KPMG was great, but you don't learn selling there. So I learned from these guys who had a startup, how to sell, how to have a CRM, how to do follow-ups, how to make phone calls. And I said, well, I can do this too. And I started doing it. First, I was selling for them, and then I started selling the services which I can provide about taxes. And wow, I could do it as good as anybody else. And I started to bring in clients, and it slowly grew and grew. And first, it started as a side gig, which I recommend for everybody if they have an entrepreneurial idea. But then my side gig turned into my full-time job, and I've been doing it now. We have hundreds of clients throughout the country, and we've been very successful. We have most 5-star reviews of any accounting firm in the city of Atlanta, where I'm located, and I'm very, very proud of that.
Yeah, well, it's not surprising if it's a small business. It's a small accounting firm that is owned and run by somebody who worked at some of the top accountancies in the world for 20 years. It's not surprising that you guys would do a really good job. I'm curious. I want to dig into the entrepreneurship thing that you mentioned, because coming from the corporate world and getting to interact with these entrepreneurs, I think I understand what you're saying about, like, there's a different energy, there's a different problem solving creativity that comes into play, which you probably didn't get a lot of at the big firms. So I totally understand that. I'm curious, when you talk about the sales piece, like, because a lot of people have an aversion to sales. So what was it that you liked about digging into sales and getting more involved in that?
Especially accountants. They tend to be very introverted. They don't like going away from their desk, from the office. But for me, it was like you said, it was creativity. And it really is about creativity, and it's about getting to know people, getting away from your desk, going out for lunch or a cup of coffee, getting to know people and being honest with them. Don't pretend to be something that you're not. Just be yourself. And if you can tell a good story, an honest story, it'll sell itself. And that's what I found. There's work for everybody, plenty of work. And if people are not right for us, that's okay. There are other accounting firms. But we found our ideal client. That's who we go after. And there's plenty of them. And we're happy to work with them. And it's worked out very well. And it's truly creative. It's truly creative, which is the main difference between that and, say, just cranking out tax returns. It's really about helping people, telling a story, telling our story, and helping them and relating to them. And it's made a big difference to a lot of people.
Yeah. Amen. Yeah, I love the problem solving aspect of it. With our clients, we like to get our hands really dirty. We like to get, like, really involved in their business, because it just makes it more fun, like understanding really what is going to drive their business to the next level, and then helping them to pull those levers, as opposed to when I was at Capgemini, I honestly felt like a lot of the other consultants on our projects were kind of just like putting in time. It's like, oh, we got to go get our billable hours up. It's like that. Well, that's not really helping anybody.
Right, right.
So, the I'm remembering, yesterday actually, my wife was showing me this thing. She was like on Instagram or something, and there was this like meme that said, your first day at a startup, and then it was like a quote, and it was like, okay, hey, welcome to the startup. We expect you to be able to fully do your job by yourself by the end of the day. And then it was like, here's what your first day is at a large corporation. Quote, okay, this is how you set up your password for your email address, and the password is what protects your email from other people getting into it. It's like night and day, very, very different work lives, All right, I want to talk about taxes. So I want to pick your brain about some of this stuff. So we'll take one of my clients as an example is a startup incubator, and so they have a bunch of different startups that go through there, and we provide financial support to them, financial modeling, help with their pitch deck, stuff like that. But a lot of times, really, really early on, even when they're pre-revenue, they're asking us, can you guys help us with like tax strategy? Can you help us with tax planning? And my advice to them is usually like, don't even think about that. Just go find customers and make money. Like that's the problem you need to be solving
That's
right now.
true. That's true.
Okay.
That's absolutely true. Yeah,
Okay.
right. They have to be making money. Most of the tax issues come after you start making money. There are things that you could do first. For example, people who are in the tech world should be thinking about research credits that can be saved for when they start making money. But that's something which is going to be important. And setting up the right entity is very important. Like whether they're an S corporation or a limited liability company. These are all important things. But the greatest tax benefit is for people starting their own business. People who are employees, it's hard to come up with creative tax planning ideas. But the tax planning is for people who start their own business, whatever it is, whether it's walking dogs or whether it's some kind of a startup or doing real estate or investing in rental properties. These are all different ways to start saving money or to start saving taxes, I should say. And that's where the opportunities are. And that's what I tell people. Start some kind of a startup, have a side gig. And once you do that, you can start to offset your other income. The opportunities are.
Amen. And the reason that you can offset your other income from that W-2 job you have is because with your new entity, you can really start to deduct a lot of business expenses through your
All
new
kinds
entity,
of,
right?
exactly. Things that would otherwise be a personal expense all of a sudden become business expenses. And these are legitimate expenses. Like, for example, having a home office. Many of us today have home offices. So all of a sudden you have an office and a percentage of your home expenses become business expenses. That's a tremendous benefit. It'll save you a lot of money. So there are all kinds of ways you can do it, whether it's cell phones or travel or the percentage of your home expenses which relate to your home office, or car expenses. That's a great example. Automobile expenses, you can take a percentage of that. There are all kinds of things which transfer from being personal in nature to being legitimate business expenses. And that's great.
Yeah.
Even
Meals,
if you have losses,
travel.
You can offset them. Traveling, there's all kinds of things you can do.
Yeah.
And it's great. And that's where the real opportunities are.
Okay. So just shifting from being a employee to being a business owner, or maybe both, still keeping your day job, but having a business on the side. That's the main. Yeah. So that's the main benefit you see
the
at
most
that.
Powerful. That's the most powerful tax planning idea that I see is people switching to some kind of either a side gig or some other kind of business other than being an employee. There's so many things you could do. For example, here's another example, which I just love. Saving for retirement. That maybe sounds kind of boring, but I've been amazed that if you have a business of your own, you can really start to save a powerful amount of money for your retirement. it's something that I didn't even know that much about when I was working for big firms, and I was getting just a regular paycheck. So you put a little bit into a 401k. But once you have your own company, your own business, whatever size it is, you can start to really save powerful amounts. It makes a big, big difference year after year. It's tax deductible and it will really accumulate. And, it's maybe that's not the most sexy idea, but it really makes a difference when it comes to building wealth.
Yeah. Well, explain that one to me. So why does having a business allow you to save more for retirement than if you did not have a business?
Well, because you can start your own 401k, for example, and you
Okay.
can put in a lot of money. I can't remember the exact number now. It's something like, was it like around $50,000 a year if you're making money. But you have to be able
Right.
to show that your company is actually making money. If you just have losses, then you can't do it. But if you have a profitable company and you show a profit, you can all of a sudden start to save money. And so it's okay
Yeah.
to have a profit and to be paying taxes. That's okay.
Yeah.
That's okay. Paying taxes means that you are indeed making money, and that's what this is all about. But I just want to leave people with the idea that you can really save. And how do you find out about that? Talk with a good financial planner. Those are the people
Yeah.
who can set it up for you, and I can tell you what it is. But I will tell you that you have to be able to show income from your business. If
Gotcha.
you're always showing losses, showing that you make a teeny amount of money, then you can't do this strategy. But if you're really making money, then start to set it aside, and you'll be amazed at how much you can put aside.
Okay. Because otherwise, if you just have a 401k through your employer, the maximum in a year is what? Like 19 grand, 20 grand, something like that?
Yeah, yeah, yeah,
Okay. So with your own
yeah.
business, you can do a
And
lot more.
those folks, you can do a lot more. And typically, if you're an employee, then you're not making so much money anyways. And
Right.
to save to take out of your paycheck whatever it is, $18,000. That's not easy for a lot of people.
Yeah.
But I find that once you have your own business, all these things are coming together. You have your home office, you have a business car, which is being used for business expenses. All these things start to come together. And
Yeah.
people should realize that you can really do it. If you have that entrepreneurial spirit and go out, meet your clients, meet your customers, tell a good story, have a smile, and it really can work. And I want people to know that it can really, really work for them, and they can build wealth for themselves and for their families. And by the way, another great idea is hire the kids to work in your small business. It makes such a
Yeah.
big difference. Not only are you building wealth for the family, but you're teaching the kids how to be business people.
Hmm.
You're giving them business skills. It'll
Yeah.
save on taxes and it gives your kids business skills. There's just so much you can do to benefit the family from a small business. I'm a huge fan of it.
Yeah. Me too. I am too. Um, you mentioned like a R&D tax credit, right? Like research tax credits. A lot of the companies that we work with actually do ask us about that. So what do you think about those? How do those work? Why are they important?
Well, it's great. I'm not a specialist when it comes to the R&D credit. I have other people who I work with who can go through all of the particulars.
Hmm.
But basically, if you have expenses that are tied to some kind of a research improvement process where you develop typically some kind of a technology, you can get
Hmm.
credits that you could use later to offset against future income. So people who are in that space, I would introduce to one of my R&D tax credit guys. But
Gotcha.
it's a great idea. Kind of similar thing that we do is called cost segregation. Cost segregation is a tax benefit for people who are in real estate. I see
Okay.
that a lot, and it's a way of getting more cash from people who are in real estate. You can basically depreciate your assets faster, and it's a great idea. And I have people who do cost segregation studies, and it's just a great idea. There are lots of these little
Yeah.
ideas that you can put together. Hiring the kids, like we said before, all these
Hmm.
things, as long as they're legitimate activities. And I always tell people you want to stay out of IRS trouble. That's one of my phrases. We're pretty conservative.
Hmm.
And the ideas that we come up with are legitimate, and we make sure that our people pay their taxes and stay out of IRS trouble.
Right. Well, let's talk about the IRS thing for a second. So, and
Sure.
I've, knock on wood, have never had to deal with any sort of IRS audit. What is it like getting audited by the IRS?
Well, it can be very unpleasant. And one of the best ways to audit proof yourself is to have receipts. That's what I tell people. Keep a
Hmm.
receipt of what you do, and the receipt can be on paper or it can be a digital copy with a phone where you make a photograph of receipts and just save it. And that's pretty much the way to audit proof your tax return, as long as those receipts demonstrate reasonable business expenses. Okay, they're normal
Yeah.
things that people do on a business. It's normal. As long as you can do that, you're pretty much audit proof and you have records. That's one thing that small business people need to understand is you have to keep accounting records. Most of my clients use QuickBooks. So if you have QuickBooks set up, QuickBooks Online set up for your small business and you're keeping records, and when the auditor comes in, you can show them the QuickBooks reports, you can show them receipts, you're pretty much audit proof. So that's like a simple thing, but I recommend that to everybody. Now, if
Yeah.
you're unlucky and that's not working out for you for whatever reason, you're missing the receipts or something isn't the way it's supposed to be, then you're going to have a harder time. And the letters are going to start to come in the mail. And either it's about an audit or it's about back taxes. We deal with a lot of people who have back tax debts. They submitted a tax return, but they owe money. So what do you do?
Yeah.
And the bills are going to start to come in the mail. So you have to, the key thing is to open the mail. A lot of people, when they get a letter from the IRS, they just put it into a drawer and they ignore it. That's the worst thing that you can do. Open your mail, and usually the IRS is going to work with you. So there are various programs that are available for people who owe back taxes. Installment agreements, for example, or offering compromise. There are various programs that you can take advantage of. And all of these things together will keep you out of tax trouble.
Okay. When you mentioned the receipt thing, I just had a quick question about that. Do you actually need the receipt, or if you're putting it all on your business credit card, and so then you have your like credit card statement in your online portal, is that enough of a record?
That's a great question. The problem is with those portals and those documents is they don't give you any details to what you bought. They'll just say that you went to Target and bought something.
Right.
That's not proof enough. Did you buy clothes for yourself, or did you buy printer paper? It's not going to say on those credit card receipts. So that's the problem. That is the problem. If you're ever audited, that credit card document is not enough. It's not going to. It's just not going to help you, unfortunately.
Yeah. Well, it's good to know that the IRS will work with you if you do end up owing back taxes or something like that. That's good to know. Is there like a certain size that a business has to be before the IRS will even really care to audit you?
No, I've seen small businesses. You'd be surprised. I've seen plenty of small businesses who are audited. Some of them just have discrepancies between like a 1099 and what they reported on their tax return. If there's a discrepancy between a 1099 or a W-2, some kind of a tax document, and what you report, you will get a letter eventually. Within a few years, you'll get a computer letter that's saying that there's a discrepancy that you have to fix. So that happens to everybody, big or small. You should expect that.
Does it usually take?
That's like a mini audit.
Yeah, and you said like within a couple of years. So does it take that long? Because I know a lot of people, if it takes that long, oh my God, by the time they get that letter, they're going to be like, I don't know what the hell happened 2 years ago. How am I supposed to?
It's up to 3 years, but I mean, typically I see about a 2-year wait period. Okay. You're right. People don't remember. And that's why, getting back to the QuickBooks, that's why you have to have QuickBooks, because that is your paper trail of what you did. That shows you the components of the numbers that are on your tax return.
Got it.
That's what the receipt should be supporting. But without that, you're really lost.
Hmm.
really
Yeah.
lost. So just as a best practice, anybody with a small business, make sure that you have QuickBooks, make sure or some kind of accounting software. It doesn't have to be QuickBooks, but something. Make sure that you have a software in place that's going to support the numbers. It should be reconciled on a monthly basis. Reconcile means that you prove out that your numbers are correct compared to the bank account or your credit card accounts. That's called a
Hmm.
reconciliation. It should be done once a month. And if you don't do it once a month, again, what the problem is that you don't remember what you did 7 months ago. Never
Yep.
mind 3 years ago, right? So that is a best practice for a business. And if you do these things, and if you open the mail from the government and you pay quarterly taxes, that's another thing we should mention for all our small business friends. They need to pay their taxes quarterly. If you're an employee, you have withholding, right?
Hmm.
But if you are a business owner and you don't have withholdings, you have to pay your taxes quarterly.
Okay.
So
Gotcha.
that will
What
keep all
about,
these things together is the recipe to stay out of tax trouble.
yeah. What about sales taxes? What do business owners need to know about sales taxes?
Great question. Sales taxes typically apply to selling a product. It usually
Hmm.
does not apply to services. Like accounting, for example, we don't have to charge sales taxes. But if I had an online business selling clothing or office supplies or whatever, or coffee cups, you're going to have to charge sales tax. And the states are super aggressive. Some platforms, like I think Amazon, is going to do it for you, but some
Hmm.
do not. So you have to check with your online. If you're using an online selling platform, you have to see if they provide that service. If not, you have to do it. And we do it for some of our clients, or we hook them up with a sales tax company. But basically, you have to make sure that you're charging the sales tax and you're submitting it to the government, to the state governments. And there are certain
Okay.
activities which will trigger sales tax. For
And
example, if you have
say,
inventory in a state, or you have offices in a state, or you're selling over a certain amount, and every state is different. That's important to know. You have 50 states, and they all have different rules. So there's a lot to know.
yeah. And sales taxes, those really only, if it's a product, the last person to sell the product has to submit the sales taxes, right? So if I sell to somebody who then, if I sell to a business who then sells that product to an end user, they have to collect and pay the sales tax, right?
Right, 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 right. That's right, right. That's right.
Oh,
So like a manufacturer is usually not going to be charging sales tax, but it's the end retailer who is going to charge the sales tax. That is correct.
okay.
People who are in a supply chain, they can get exemption certificates. They would get that
Hmm.
from the state, and it shows that they don't have to charge sales tax. That's
Yeah.
important to have. That's a great point.
Okay. Awesome.
But the states are
Well,
very
Gary,
aggressive, so you have to be
yeah.
careful.
Yeah. Well, thank you, man. I appreciate you coming on. I'm going to link to your company website, masseyandcompanycpa.com. Um,
Yes.
and we talked about a lot of things. Clearly, you have a lot of knowledge. So, really, any small business that wants help on any of the things we talked about, making sure they have proper record keeping, making sure they have their QuickBooks Online set up and they're managing it properly, making sure they're filing their taxes, all that stuff, they should come to you. Is that right?
Well, we're happy to help. I particularly enjoy working with startups and entrepreneurs, younger business folks. It's just exciting, and it's a dynamic and exciting world. And they, like I said before, they can make a difference for themselves and for their families. And it's just a great thing. They're happy. I'm happy if they reach out to me. They can go to my website, or they can email me, and I'm assuming that you'll put in the show notes contact information. They can call the office, and my
Yep.
my team and I will be delighted to speak with anybody from your audience.
Fantastic. Awesome, Gary. Well, thank you so much for joining me today in the Lion's Den.